Good morning, everyone. Happy Monday. I hope everybody's had a great weekend. If you're new here, I'm your host, Marcus Stoker D. I've been trading for almost 19 years at this point, and 13 years out of that, I've been a prop trader, mainly in the commodities. So you will see me trading things such as precious metals, base metals, and sometimes energies markets, but that is usually reserved for much later in the day. Now, if we did have DAX for this time of day, that would be my choice for this particular session, this early on. But until DAX arrives, we're going to be looking at what silver and maybe what copper is doing as well. Copper has been moving a little bit more. Now, here I have a couple of conditions that I like to have whenever I'm looking for setups. Excuse me. So the first setup that I look for, typically earlier than now. So when London opens, you do see a lot of tests of Asia high or Asia low, followed by a prompt reversal. But those reversals will be dependent on the context and will be dependent on how the volume behaves. Right now, neither the Asia high nor the Asia low have been tagged in silver. And I've been preferring silver over the last sort of month or so, because I do think that gold is still in a bit of a crazy range, which obviously increases the overall risk, just like purely talking market risk. And if we compare the average range of gold, which is still pretty wide at 530 ticks in the 24-hour period, that's still a little wide. I want that to come to about 400, whereas silver is still sitting around 375 ticks per 24 hours, on average, obviously. And that means it's a lot more palatable, and it matches more what we should be doing with prop accounts. Now, if we're talking your personal accounts, obviously that will depend on the size of it. But prop accounts, they all start between 2K and 4.5K maximum loss limit, okay? Right, so whenever I'm looking for the pops above the Asia high or low, there are a couple of things that I want to see, and it depends on the time of day. They will differ slightly. So obviously any range from the previous session that we're referencing has to be pretty decent. So if the range is tiny, it's very likely that you're not going to have too many good setups that are high probability. So the small Asia range in the last 2-3 years on metals means that it's going to be usually a little bit meh, right? But today, luckily, silver has moved pretty well. We had a typical reversal until the Shanghai exchange opened, and then they kind of reversed the whole down move. And ever since, it's been going up, but it's not exactly screaming to the upside. So again, for now, both sides of the story can be considered. And the first thing that I will be looking for is how the price is going to behave around the Asia high. One thing that I look for with liquidity sweeps, or stop, run, and reverse, as we used to call it back in the day, is for the spike that you see on a lower time frame. I like 2 or 5 minute charts, depends on the speed and what I'm trading. It really needs to be quite big, so it needs to be 1.7 times the surrounding bars, but no bigger than 3 times volume of the surrounding bars. So for example, if you see this little pop, if you look at the surrounding surrounding bars that preceded it, it's not really 1.7, right? It's almost equal to this one. So that's not what I want to see. I want to see something along the lines of this or this, because this one, the shakedown, it had tiny little bars, and I usually like to look at 3 previous bars. So 3 previous bars, they're pretty small, And then you have this big smash that is about 1.7 times bigger than all the surrounding bars, and that tends to lead more to reversals. But if the spike is too big, and especially if we have a spike and then it never really pulls back into the range, but instead ends up as a doji, that tends to lead to a continuation rather than any sort of a reversal. So maybe a test of VWAP at that point as a good area to keep going higher. That could be considered. If the initial balance high is somewhere around there, that could be a good reference point as well. But obviously all of that depends on how the price behaves. So we can never just have a level and just go, oh, it's touching IB high, D said go long. No, it's always subject to how the price behaves. And for that purpose, I always use Bookmap. So I do read tape, and I will want to see, you know, the tape getting lively. This is not a lively tape. This is actually pretty barcodey at the moment. Like, look at these candles, full of spikes, no clear trend, but it's sort of haphazardly going higher. I'm not really interested in getting involved in that because it tends to be painful. There's no commitment to any direction, and the price action, even though it is kind of going higher, is being pulled in both directions. We don't want to see that. Now, if we ever get to the Asia low and we bust through it and then the price reverses, on bearish Tokyo days, and then London steps in, and at some point, even COMEX can actually swipe below the Asia low. If we reverse, that is actually a strong probability for a continued bullish move. So stop, run, and reverse, and you will be looking to take all of the Asia range. So not 50%, not 75%. Now with the shorts, if I was going to go stop, run, and reverse from the Asia high, depending on how it happens, you have two targets. It's either going to be 30% of reversal from the entire Asia range or 50%. So those are some of the targets that I like to use that are very, very specific to metals. And going over that is probably more FOMO and hopium than actual strategy. So yeah. But just be mindful that if the volume builds from the opposite side as well, so, you know, you have to, again, see how the price is behaving, and then it gets to Asia high, then it breaks it, and it creates a spike that is more than 3 times the size of volume of the surrounding bars. That's usually continuation. That's not liquidity sweep, as the cool kids like to call it these days. Silver is very expensive. So Mystic Rick says, how much is silver per tick? So full silver is not really suitable for prop. Full silver is $25 a tick, right? And with something that moves 372 ticks in a day, that can get a little bit painful. So micro silver is a little better, which is what I have here. Still, L is the micro. So still expensive, $5 a tick. But if you're using, let's say, 40 to 55 ticks for a stop, it's just about acceptable, but not if you're going to be an overtrader, right? So if you're going to do 20 trades per day and you're using a 55 tick stop, obviously that's a lot of risk if the day doesn't start off well, especially if you're on something like a 50K. So one thing that I tell to anyone who's asking me about how I approach prop is to aim to do between 1 to 3 trades per day with some kind of a positive R. It doesn't have to be 2R. I like 2R, but it doesn't mean that we're going to get 2R every time. So if it's more of a range-bound day, you're probably only going to be looking at 1R maybe, down to like the middle of the range. And I will take those, and on those days I will typically trade more. So I will even do 5 to 7 trades. However, a lot of the days that won't be on the same product. So I'm not going to be trading one thing and then trading to death, like, you know, getting a couple of trades right and then maybe a loss and then another couple of trades. Like, I don't do that. And I'm not a scalper by choice, because over time, I just realized that scalping is very labor intensive, and to be honest, I don't think I would be here 19 years later if I had to manually scalp, because I think I certainly wouldn't look the way I look at my age. I think I would be very stressed out. I think I would be not a very nice person. And for me, scalping, even if you scalp, it should go by, let's do 1 to 3 trades per day. So it can be a smaller target, absolutely, but doing this like 20, 30, 50 trades a day, it's like, what are you doing? Are you trying to make the market with what? A prop account where you're on sim? It just doesn't make much sense, right? So the reason why people would be trading more is because they're making the market. And, that's typically done with a combination of a core options trade and then a whole bunch of futures trades that trade around the bid and ask. That's a completely different way to trade, right? But if you don't need to make the market, if that's not your job, why not do less work for more money? That's one thing that I never really understood in this day and age. Because back in the day, if you were trading 20 trades a day and you weren't in a market making position in a prop firm, they would literally be like, what are you doing? And then you would have to explain what your strategy is. You literally would have to go, okay, explain to me every single one of these 20 trades. What were you thinking? And if you weren't able to do that, you'll be put back on the sim. So just keep that in mind, because I think that this whole, prop firms are amazing. They've made trading accessible to nearly everybody. So that's kind of a positive. But at the same time, you have a whole bunch of people doing exactly the same thing. They're trading NQ, they're trading a lot, and they just will not go quality over quantity. They just won't. And I've tried to the best of my ability. I'm like, look at the higher time frames. Look at a 30-minute and a 4-hour chart. See what happens. See how that changes your relationship to what the price is doing right now. So, if we go to a 4-hour chart, it's like, do you think, so let me just get rid of that. What do we see here? Where are we? Chart location wise. We're in the middle. So we have a high, we have a low. Where are we? Middle. So where is the naturally high reward for this? It's not going to be plowing in a trade here, is it? It's going to be aiming to get involved at the edges, which provides a more naturally higher reward and comparatively low risk. So if you're not thinking that, you need to start. Now, obviously, everybody's at a different point of their journey. So we have some very experienced traders who are still somewhat struggling, but they have had some success along the way. And we have pure beginners who may have had, beginner's luck where you got to a payout stage, but now you cannot replicate it. So anytime you're creating a strategy, just ask yourself, are you using the same levels? Is this repeatable? Or was it just an accident? Whoops, I went long and it went into a breakout and I just held it. And it was basically a great day. But it has to be repeatable. It's like, was that an outlier day? Was it an outlier day? Because if it was a big trending day that just carried on in the same direction, those typically happen only about 8% of the time. So it's like, if you're trying to replicate that and you come all like, high on dopamine the next day, and you're like, right, I'm going to do another one. That was amazing. I was so in the zone. It's like you went in the zone, the market was in the zone, and they were just going on a run for whatever reason. It could be, ISM, it could be PPI, CPI, if we're talking copper. It could be, some good news that just brought on some risk on sentiment, and everything went on a bit of a bull run. So, so we have to understand what it is that we're doing. So one thing I will say, don't be discouraged if you have been only at this for about a year or even 2 or 3 years. This is a performance discipline. Just because we're clicking buttons, it doesn't mean that behind the button click, you don't need some really, really strong skills. So again, don't be discouraged. Journal, find out what's been done right, what's been done not so well. Try to avoid the times of day when you traditionally suck. So I know for me, first hour of NYMEX between 2 and 3 p.m. my time, now I'm in the UK, that is traditionally not a good time of day for me. there are only a couple of times when I have a high probability setup that will do what I want it to do, which means to go on an extended run. And usually it will be a form of a mean reversion of some kind. So, it would be a short on RBOB of crude oil back in the day, but I prefer RBOB these days. So if we open within a reasonable distance from the value area from previous day, value area, what is it? It's a distribution curve from the previous day's trading, just the regular trading hours. So if we're outside of that, the theory and everything says that we will first test the distribution curve. We will go back to it. So on those days, there are times when that is a great setup for me early. But traditionally, if we don't have that, we're opening inside value or we're too close to value. That's not a good time for me, so I will wait. But the best time traditionally for me is between sort of 3 p.m. and 5 p.m. my time. And usually you get really nice reversals that have a lot of legs, a lot of juice to keep going well past 2R multiples. But I like to take 2 or 3R, depends on what I'm doing and how big the stop is and where I'm getting involved, right? So, all of those like little tiny things. It's not rocket science, it's just like little bits and pieces that you need to remember. So if you focus on slightly bigger time frames, it will give you context, and then you can zoom in and you can actually snipe the entries based on volume, based on real-time order flow events, seeing whether the market participants are reactive to whatever you're seeing them trying to achieve, whether there's any absorption. And once the reversal happens, is there commitment behind that move, or is it all a bit sketchy? So on Bookmap, you can typically see it as consecutive bars. Let's say we're talking longs. So if we swipe page or low and then we reverse, I want to see consecutive bars that are the same color. So I like to use the bid and ask volume dot settings. And it just becomes yet another way to figure out whether the market participants are actually getting involved and pushing it in the opposite direction. And it's very obvious. You can see the smoothness of movement that kind of doesn't really come back to any particular price. So you can do that by just putting a simple line on the chart and then just seeing how the price behaves around it. Similar to you being in a trade, right? So if you're in a trade, your awareness of what is happening with price becomes amplified because now you've got some skin in the game and you're like watching it. Now, I'm pretty relaxed in my trades. I don't really freak out. And a lot of the time I would put on a trade, maybe watch it for a couple of minutes and then go and make coffee. So, yeah. But yeah, if you are looking for how the market is behaving, pop in a line and then see how long it takes it to go into profit, so to go above it. And as you can see right now, I popped in just a random line. It's not doing anything. It's just like, I've been talking for a minute, and it's barely moved like a couple of ticks from it. So it means there's not that much movement. You can also look at volume, but sometimes our spidey senses can be a little helpful, not for entries, conditions, and exits, but certainly for how the market is doing. Is it smooth? Is it struggling? Is there a lot of push and pull? And typically I don't really like to get involved when there's so many inside bars. So I'm pretty selective and I'm very patient. I'm so patient. That's probably, if somebody asks me, what's your biggest strength? I can wait. Whether I'm in a trade or not, I can wait. And by far, that is the biggest strength you can have. All right. Where's my bias? I don't have a bias. We're intraday traders. Going in with a bias into the week is probably the worst thing you can have. I never have a bias. I have 2 to 4 hypos in any single day that account for both sides of the story. And commodities are not, like there is a trend, right? There is a trend on gold, there is a trend on silver, but they are just not as directional as equities. So going in with a bias, one day you might be up, the other day you might be down, third day you might be down again. And then you're like, oh no, is this a trend change? No, it's just commodities doing commodity things. So I've learned a long time ago not to have a bias. So I keep my mind open. I look at my reference points and they will be my guide. So my reference points are always the same. Asia high-low for this time of the day. Previous day's value. Quantitative extremes, ADR high, ADR low, and also average session range high, average session range low, which is my little twist on the whole 24-hour range, but I just use regular trading hours over a number of days. That's how I like to calculate a whole bunch of stuff. But yeah, bias is a bad thing as an intraday trader. You can't wake up and go, oh, I think this silver is going up, and then it goes down. And then you're like, oh, but I thought it was going up. And it doesn't allow for a contingency plan. So I literally sit down every day with like just a blank slate, right? I'm like, Drew Barrymore from 50 First Dates. You've had a brain injury. You cannot retain anything past today. If you've ever seen that movie. So as an intraday trader, that's the best way you can be. To have a short-term memory when it comes to the actual events and only focus on the now. Be more dog, right? Dogs are very good at living in the present, and we need to be the same. So as intraday traders, you focus on the now, not what your P&L did last week or how you effed it up on a Friday or, you know, how much psychological trauma you've had over the years of trying to do this. No. Put that aside. I know it's easier said than done, but there are techniques that can help you deal with those traumas. Like EMDR is a very good one. It's actually used in trauma victims and people who have had something horrible happen to them to desensitize the brain using some neuroscience tricks and a lateral eye movement and to help you deal with those emotions and traumas a lot more effectively so that they're not affecting you going forward. And as traders, we hold a lot of false beliefs about ourselves and our abilities, and many people that I've met, they love talking down to themselves. That needs to stop. Like negative self-talk is not going to get you anywhere. So no bias, just data, intraday levels, and, you know, we can look at higher time frames and we can just see what's happened, right? We can see what's happened. We're in a range, but we made an all-time high last week, yeah? That's the only thing we have. There is no bias. Is it up? It is up, but it's distributing. So at this point, this could go either way because we have a range on the daily chart. Weekly chart, what did we do? We actually, intraday last week, I was watching this high, weekly high, and they tagged it, went a little bit lower, then promptly reversed it and carried on higher. So there is a trend. But at the same time, you get a lot of these days. And this is a full, like, several weeks of trading. So if you had a bias, let's say you were long, how would you have done in the previous month? Not very well. There's a lot of down days, right? And then, yeah, eventually it went up. But even though your bias was correct, that it's going to go higher, it would have meant absolutely nothing. So I would urge you not to go into any day as an intraday trader with a bias. You can do that if you're swing trading. You can do that if you're doing options. They are, like, especially long options tend to be, you know, limited loss to the premium that you paid for them. And you can make a lot of mistakes. You know, you can make a lot of mistakes. You can roll the position as well to quite some cost, but you can still sort of bail yourself out a lot better. Whereas in intraday, this is like the Olympics of trading, you know, the trading and investing on speed, where your decisions have a huge effect, instantaneous effect on your P&L. And a lot of you trade with a high risk of ruin. Like you would get a 50K account with a 2K maximum loss limit, and you're risking 500 per trade, or even 200 per trade. That's 10% of the allowed risk. And then you do multiple trades per day. Well, if you're going to use 10% for anything, use it for your daily loss limit. So fit all your trading into the 200. That's the only way to last, right? We see a lot of people who are like, make a lot of money, and then they blow out and we never hear of them again. So, you know, be very careful of that side of things in trading. So no bias, No bias. The only thing I can tell you right now is that we are sitting inside the COMEX value from the previous week, previous day. So let's put the fixed volume profile so you can see where it is. I can adjust this later. Yeah, it needs to go a little bit over. Yeah, so here is the purple area, is the Friday's value. Do we move away from it? No. Do we go below it? Yes. Is there anything to be traded to here? Well, maybe if we get below the distribution curve, but then we also have a new reference point that was made today, which is Asia low all the way down here. So what's the range? Well, from Friday high to Asia low, that's the swing, the major swing you're looking at. Inside high was created by Asia, and that is a reference point intraday. But does that have legs to go all the way to the opposite side? Probably not. So I would be, if I do get involved into an Asia high stop run and reverse, 30% of this now Asia range is the most that I will be asking for it, from it. So where's that? So 30%. So we have about 2.15% of the entire range. So what's that? Maybe down to view up. And that will be it. Maybe down to view up. Maybe. But if we swipe the Asia low and reverse, then I get a bigger profit margin. So then I'll be aiming for us to go back to this 59 area. And 59 is also GEX2 today from the end of day trading. We still have this 60 call wall, so that's not really changed. And we have another GEX level with a fair amount of open interest, is 59.50. So all of those are points of interest. And then to the downside, just round numbers, 58, 57.50. Don't really have too much below 57.50, so that is also, well, I suppose 57 evens could be tagged as well. It's not the strongest level this week, 57. So if we get there, maybe it's an outlier day and it just keeps going. But for now, we're quite far away from that. However, the average daily range is to the downside is sitting at about 57.20. So somewhere there. Let's put that in. That's the range, statistical range, quantitative extreme that we have available. If we get there, awesome. But if not, we need some other levels. I mean, if you have the patience to only ever wait for the ADRs, it's a great strategy, but you might not trade a lot. So you might only trade, a couple of times a week. And as intraday traders, we need to have something that is repeatable every single day. So the swipes of Asia high and low, they tend to be occurrences that happen a lot in a week. So you can get at least a couple of setups on the same product in a day, which is pretty good. Yeah, I look at 4 hours, I look at the daily, I actually look at the daily time frame every day. I know it sounds like, oh yeah, why are you looking at daily? Because it gives me context. And then I always have a chart that has a 4-hour time frame on it with all my levels. And then I also, if I'm in a trade, I want to know what that trade looks like on a higher time frame. So this is my actual charting platform. And because, charting indicators, it's all just logic and it's data. It doesn't really matter what you use. And I'm comfortable with my AMP MT5 because I've traded for so long. And the logic, I like the platform because it has some algorithmic side of things. Like you can export tick data for free. and a whole bunch of stuff. So if I look at how we are on a 4-hour chart, we're just in the middle. So interesting point. So when we go into the quartile of this whole swing down here, incidentally, this is where the ADR low is. This is your ADR high, so at the top of this swing. But that's also all-time high. Is it clever to go shorting all-time highs? I mean, you might get lucky a couple times, but you keep shorting all-time highs and you will quickly run out of cash. So that's not a good strategy. So again, context is important for sure. And we have a pretty strong trend that's been in force for a long time on silver. And on gold as well. So there's no point battling that. What is my charting platform? I use MetaTrader 5 from AMP Futures. So they have CQG data on the back end. And back in the day when we were starting our software development firm, everybody in Europe, UK, and I mean quite a bit of US as well, they were using MetaTrader as a largest retail platform. But AMP came up with MT5 version, which was their response to the futures market, and that's what I'm comfortable with. So that's where block tick indicators are created. We are trying to create things for other platforms, but in the meantime, I do have a Discord server that is just a utility Discord, and it literally just prints our levels on there. Now my computer decided to reboot over the weekend, so because the levels are coming from my side of things, you will see something like this. So we print those levels 3 times a day, 1 time at Tokyo Open, which is also when the profile levels are done. And these are now connected to the specific YouTube memberships on my own channel, which is Market Stalkers. I'm going to make a video explaining everything, but we did actually have a couple of people who are already in there because they saw it, and they obviously have been with me for a while, and they're like, "Oh, blood tick levels, this is great." So although it's not an indicator, but they do give you, it does give you levels that you can put on the chart. Right now we're catering for about 12 markets. So yeah, we've been busy in the background. Sorry, that was just a message that I had to respond to in relation to my computer rebooting and then I'm not getting levels. Hijab. I don't know what hijab is. No idea. Are we in a buy situation for ES? I don't think so. I think we're in a holding pattern situation, but please be mindful that I'm not a commodities trader. That I'm not an equities trader, I'm a commodities trader mainly. And I think we're just chopping in a range. ES has a, let's have a look. ES levels. ES has a call wall at 6880, but quite a lot of levels that could bring chop. Equities do go up over time, but we are now in a situation where I would expect to see some profit-taking moves by the institutions, because this is the time of day where they like pay out bonuses ahead of Christmas. So this is not the time of the year where I would long ES. After Christmas and into January especially, yeah, new positions coming in. You know, you want to trade with the institutions. You don't want to trade against them. And many people are like, oh, you're trading against the institutions. And I always say, if you're doing it wrong, yes. But you know, you need to see what the market makers are doing. How are the dealers positioned? Are we in positive gamma, negative gamma? That's like just overview of the market conditions. What is VIX doing? You know, are we in a high volatility, low volatility, medium volatility? And once you have all of those puzzle pieces, you can make some decisions in a little bit more of a straightforward way without emotions. And I really truly think that the whole disconnect between retail trading results and institutional results is just an information asymmetry. You know, you guys are looking at FVGs and you're looking at the result or resulting price patterns from which, you know, it's okay to do that. I'm not saying anything against it, but I'm just saying that the institutions do not look at price. Like a lot of the times they won't even have a chart up. They will just have a whole bunch of data. They will have some levels from the open interest on, you know, the options market, and they will just position themselves. If there are institutions who are looking for actual position and portfolio trading for their clients, they are more likely to be the other time frame participants, in which case you will see them get involved in the naturally low risk, high reward areas with a big liquidity pool. So where are the big liquidity pools? The big liquidity pools, let's go back to the basics of supply and demand, technical. Big liquidity pools are located at points where the market turned around and then brought a very big move with a follow through. Where was the last time that that happened? Here, on silver. Let's look at ES. So where was the last time that we had institutional engagement and commitment? Here. Roughly 6,600 was the reversal. And then since then, we've had a nice move up. Where are we now? At the top of the range. So just purely from a structural point of view, is this a good area to long? Probably not. So what do you think the other time frame participants are going to do? Yeah, sure, they might go long into an all-time high, but that's not going to be the other time frame guys with deep pockets who are like, yeah, let's initiate new positions at the all-time highs. These would be dealers. So if something happens and we go higher, the dealers will keep going. Like, let's say we somehow go into some mad movement up. Well, they will have to adjust their inventory, and with the volatility to the upside, that kind of changes things, and it can actually push it into a negative gamma environment even if we're going up, and then that can amplify. So dealers having to effectively buy more in order to remain delta neutral, which is also a problem for them, right? Because they are now in a disadvantaged position, but they have to adjust inventory. But knowing these like structural points, so to me, this would be, if anything, at least a pullback. Would I be short? Yes, I wouldn't, because I don't like being short equities in general. If I'm short equities, I'm out of them like probably within like about 20 to 30 minutes. Because generally, if it's a short in equities, it should happen pretty much immediately. If it doesn't, it means you have some bulls still stepping in, and you need to get the F out of the way, because you do not want to be in a situation where you're getting run over by long equities. The amount of people that have lost everything trying to short equities because RSI was overbought, the amount of people I know is just epic. So yeah, caution. But what we're doing here is a lot more sophisticated. You know, we're on a very, very small time frames, on a lot of the days that are very prone to noise. And you have to have that context of the large time frames in mind. So we may do something if, I may do something if we get to the Asia high, because that's the closest area. If we're in between that, we're just going to sit and chat. So Square 247 says, I have some SPX options, but I want to be clean. Are they long? Are they shorts? Are they iron condors? Are they more range bound? Butterfly? Like, what are you in on? Because, yeah, to me, somebody says, "Oh, I'm in options." It's just such a wide range. It's like, what are you trying to achieve with the option? When it comes to options, I like to look at put-call ratio as well. I like to track how the implied volatility is doing day by day, and typically I need at least 5 days to figure out what's happening. If you're going to have a nice, smooth upside movement, you ideally don't want to see implied volatility increasing, because that means it can go either way, right? But if it's like a slightly compressed range, so let's say you had implied volatility of, 37%, and then the next day it's about 34%. Well, you can kind of do an educated guess that if there was a pullback, it was a healthy pullback, and then there's no panic in the markets, right? So we went down, but nobody panicked, so therefore implied volatility has stayed slightly lower. That is actually perfect conditions for continuing longs. So that's one of the things that I would be looking at if I'm doing options. It can be useful for intraday as well, but again, it's just such a small puzzle piece. It's like, great, we've had decreased volatility, now what? It's like, I know I want to be long. I know that there's the implied volatility was all right, but where do I get in? And that's where you have to have a level of reference. You have to have some idea of what the auction is doing. Because, if you have single prints to the downside and, they're very strong sort of movements away from the initial balance, and the single prints are just staying, nobody's kind of going through them. There's no single print fade, so there's no repair of the structure happening. Then it's dangerous to go long. So it doesn't matter that what the implied volatility did. And the fact that you're looking for longs, today is not the day to be doing that. So then you have to wait, and you look for another day. So, options are amazing. Like, options data can be, like, gamma exposure, understanding gamma exposure is so powerful. But obviously in the wrong hands, it can be a disaster as well. So, not every options level is up for playing it. And then if you're in a negative gamma, any options level will break. Like, most of them will break, because that's what negative gamma is expected to do. I'm getting an interesting development in DAX now, but for the same reasons that I just mentioned ES, this is also not a good thing. So we open inside value. So this is the value from Friday. We pushed outside of the initial balance. Now, this is technically a value rejection. You're hearing my cavalier coughing in the background. Apologies. But we pushed outside of the value. This is value rejection. I would like this to happen somewhere down here, not up here, because we don't exactly have too much space structurally from wherever the Asia or Friday. Was this Friday? This was Friday. So whatever Friday New York session did. So that's a bit tricky. So to me, I would like a pullback, at least to VWAP maybe, if I'm going to run longs. Otherwise, I'm going to stay out of that. So that's not ideal. I hate inside days. Like, I'm not a huge fan of inside days. And I prefer to have an imbalance at the open, because that brings smoother movement and more decisive movement. On inside days, it's like, oh yeah, we exited. But right now, DAX doesn't even have single prints. And it's built structure. See the structure? It's built structure around the initial balance high. So this strength of auction, I would give it a B- score. And if I look at the 4-hour time frame, it still looks a bit range bound, very wicky. So again, until that changes, I want to be careful. So yeah, maybe if we tag VWAP again. So some kind of strength inside the initial balance setup to account for the fact that the auction is not that strong. So right now, Monday, early, no setups anywhere. So we'll see. just answering a message. Very exciting. Riveting TV. Dee answering a coaching message. Okay. How to make use of time and sales. So I have the time and sales on here because I don't want to drag Bookmap all the time because it gets a little bit too much. But time and sales to me, it's a bit cancerous, to be honest. I've never been a super fan of it, and until Bookmap came along, to be honest, tape reading was difficult for me. You know, I was like staring at the time and sales, and you have to remember things. And the good thing about Bookmap is that it has like a heat map and a historical memory, as if it's like a chart, but it's order flow events. So you can see what actually happened, whereas on time and sales, you don't have that. So the way I use it, and this is just the way I use it, okay? If I'm looking for iceberg orders, if I suspect, like let's say we get a big order. Now this is a micro, so that's not going to do F all. But let's put a full silver on here. This is where this is the big boys playground, right? So let's imagine that we have a massive order here. Let's say somebody with, in silver, 73 contracts, 70 contracts, that would be a big order, right? So you see somebody with 70 contracts sitting at, let's say, 58.90. And the price keeps creeping up to it, but it's not disappearing, so it's not a spoof. That speaks to conviction in the institutional positioning. Now, once we're there, now of course we can't know whether it's a new position or an old position that they're trying to exit, because it could be like, you know, short liquidation or something, or longs liquidating, depends on what's happening. But if you see a big order sitting there, and then as the price is creeping up to it, suddenly you start getting these chunks of orders on the time and sales. 5, 6, 5. And you're like, that's happening in a very similar range and size and frequency. So that's an iceberg order. That's what I use time and sales for, to spot iceberg orders. But it's only available when you have a big order sitting on the books. And it's still there if the price gets to it. So the question is then, what is this person doing? Is it just a spoof? Or if it stays there, that's a real order, is it trading out? Now, big institutional positions, you cannot just plow them in because you scare the market, first and foremost. Second of all, you have a big impact on the market if you're trading with size. So you can't just plow in 100 contracts of silver or gold or crude oil for that matter without the rest of the market participants noticing and you basically taking the majority of the order book with you. That's a scary thing. That's where iceberg comes from. So it's not like institutional malice where they're like, oh, let me just screw everybody by partially my order and hiding. No, they do that because they don't want to have too much of an impact on the price and the market. And that also speaks to confidence in that move. Now, again, no way to know if it's an old order that's being closed or a new order being initiated, but maybe from the context, you might be able to figure it out. Are we at the top of something? Is it, is it the distribution curve? Is there some kind of an event coming up? There could be a whole bunch of reasons why somebody will be either exiting or entering a new position. But that's how I use it. So time and sales for me is not to keep staring at every single order that comes in. I have Bookmap for that smushes the volume and the size of the orders and sweeps and absorption and everything. You can see it really easily on Bookmap. But for me, time and sales is mainly for iceberg orders, and I use it with the dome. So you have to have a large order, and then you're like, ooh, let me see what's going on in time and sales. So that's why I have this on here. This time of day, I don't think I see any large orders at all. They start coming in as we near COMEX and as we near the London fix. So yeah. But nothing, I can't illustrate it right now because there's nothing going on. Yeah, time and sales is orders that have actually traded out. So SLX says the time and sales is like the settled transaction. Yeah, they're actual orders. All of these that you're seeing, let's make them a bit. So this is all actual live orders that are being transacted right now. And you can see whether they're on the bid or the ask, but you don't know whether they're new positions or old positions. So whether they're stops or new orders. We have no way of knowing that. So yeah, it's a useful tool. Is it for everybody? Probably not. For me, for the first 7 years, I didn't touch time and sales. I stared at it in perplexion, in confusion. And then over time, as I was watching it with the price action events, I started to realize the power of it. But again, until Bookmap arrived, I still to this day, I cannot stare at something like NQ. Like, that's just terrible. I don't know whether it's going to be as bad for this time of day, but the tape during the New York session is so fast that you can't see anything. So I don't like equities in general. I like DAX because it's like really smooth. But most of the time I just find equities are just a bit meh. Like, to me, equities are, you know, a vehicle for maybe like longer term positioning. So if we get a good pullback, I might become a bargain hunter again for some stocks that I want to hold through infinity. But yeah, I just don't find, and also the one-sidedness of equities, to me, it's a bit boring. It's like, oh, what do we do? Well, you wait for, you know, a pretty decent area and then you go long. And there's only very few days when you can actually run committed shorts without sort of, you know, maybe euro close. You get to euro close, ooh, let's do a euro close wobble. But then that's a scalp. And I really dislike scalping. So, you know, I don't know. To me, commodities, both sides of the story, can be pretty juicy. You can easily have a Asia high smash and then a complete reversal on silver downwards against the trend that takes the entirety of the Asia range. And that can happen today, tomorrow, and then again Wednesday, but then they carry on higher. So it's like you have whole 3 days when it's going against the trend. And then intraday as well. You can have London going high up, and then COMEX arrives and they just run it all back for the London close. And it's beautiful. So to me, commodities are more double-sided, and I think they offer a lot more opportunities from the swing intraday perspective. You don't have to like nitpick and be scared that, you know, it's going to run in one direction against you. It's a, you know, commodities trader thing. So, you know, I was always watching equities, and I have been like, I traded ES quite a bit. Like, I'm not going to say I haven't. I know it really well, and I even traded NQ. But I don't know. After COVID, the equities just became so speculative. It's again not the same playground anymore. You have, for the first time ever, I don't know whether you guys know, but the retail in NDX and, you know, the SPX, they have taken over by volume. So now you have 55% of speculative players, 55% of overall volume is retail. Is that scary? Yeah. Is it the reason why NQ is so bonkers and weird and just jumps around up and down? Probably. Because there's no big players that are like, this is what we're doing, this is where we're taking it. And I mean, they still win in the end. But there's a lot of smaller traders that are all in the mix of this, you know, crazy price action. And all because they are higher in hopium and because they like the dopamine fix. There is no other option. Why is this connected? I don't want this to be connected. Thank you. Okay. Somehow I linked up the dome. I hate the links, so everything has to be separate. I don't want things changing. Can the trader, does microsilver respect IFVG, FVG, or generalized SMT like bunker and Q? I will be honest, mate, I have no idea what any of that means, okay? So that's like saying whoop, 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 whoop. So I'm not an ICT trader. I've been trading since 2007, and nobody in the old prop has ever even heard of the guy. So I'm sorry, but I want to answer your question, but I have no idea. I know that FVGs are similar to single prints, but like, does silver do single prints? Yes. What is a single print a result of? A strong institutional commitment to one side that has good follow through. Does silver do that? Yeah. Yeah. And what does that mean? Well, a strong candle that happens somewhere at a price point, like for example here, you have a reversal that takes out the high of the previous bar. This is a 30-minute chart, so obviously it's a bit bigger. Actually, this one is probably a better one. Imagine this is a 5-minute time frame, right? So you have a very strong bar with no wicks. So this, I suppose you can call it a morning star. And then it has obviously this is commodities for you. They don't go immediately. Some, 30 minutes of pause and waiting. And then it continues. So does it do that? I have no idea what IFVGs are, so I'm sorry. And certainly don't know what the SMT is. Ask me about failed auctions. Ask me about responsive neutral day fades. Ask me about single prints. Ask me about repair of the structure. Ask me about rotational factor. But just don't ask me about weird abbreviations that I'm not familiar with. Sorry. I'm just using levels. I do have an XFA I had to change, so I did have a live account. I was on the legacy dashboard, and as we near the end of the year, the legacy dashboard is going away. So my payouts were always done from the legacy dashboard. So I decided to go back down to the XFA stage. So I have one XFA that I'm trying to get off the ground, but it's only like a few days in, so there's nothing much to speak of. It's like sitting at break even. And I'm working on getting some more combines because the XFAs on the old legacy dashboard are also going away. So the ones that I had are not going to mean anything. And I want to move everything to the new dashboard because it's much nicer. The payouts are deducted immediately. The other one, like you put in a payout request and then you wait. Like, granted, for me, it didn't take long because obviously, right, I'm one of the team, right? But still, it would take anywhere from like especially if you would do a payout on a Friday, it's going to be like 3 to 5 business days before they actually pick it up. But new dashboards, much faster, so, also lower threshold, not that I care, but it's like 150 over 200. So, there are a lot of benefits to be on it. So I want to see if I can get into like 3 XFAs. I have 1 right now, working on the other 2 right now. But yeah, it's just, the company is changing. So they're going towards new tech. And I was stuck on the legacy dashboard. I was the first live account at Topstep. Yeah. No, so Avi, you cannot transfer anything over to the new dashboard. If you want the legacy dashboard and you have XFAs that are waiting in the wings, they will not be transferable. You cannot transfer them over to the new dashboard. So you have to start over. Yeah, not ideal. Okay, it's not ideal because some of us, we worked hard to have some XFAs in the wings just in case something happens. And then they're like, oh, new dashboard. And it's like, wow, that looks like, a Ferrari compared to the the legacy dashboard. And then they have all of these like new niceties. They have banked resets, and they have, back to funded, and they have like 150 rather than $200, like all of these nice things, instant payout deductions. And we're like on the legacy dashboard going, yeah, wait for for it to load, doesn't update until the end of the day. And it's like, no, I want to be on the new thing. Like, why am I stuck on the legacy dashboard? So yeah, if you've had combines that, again, are what you're working on the old dashboard, your XFAs, you will probably be made to either close them out or they will just be closed. So if you don't want to do anything with it. So yeah, plan your time carefully because the old dashboard, from what I'm told, is going to be phased out completely by the end of the year. So yeah, which is a good thing. Who needs the old dashboard, right? Well, you say that, but I got an email saying that that's probably not going to be the case. So I don't know whether that was for the live accounts, that maybe they can't do it for some reason because it's a different server. But yeah, I was just told that the old dashboard is going away and that you have to like change it and that it's not going to be transferable. So I don't know, there's some conflicting news there. And on the website, they're not really saying much about it. They just say the old accounts are not transferable. I'll see if I can find that for you. So let's see. Here we go. Why aren't my accounts on the legacy dashboard showing? The new dashboard will only display accounts purchased within the new dashboard. Any accounts acquired through the legacy dashboard will remain there and cannot be transferred to the new dashboard. So I don't know what somebody told you, but at the moment they don't have the ability to transfer anything, and I don't think they will anyway. So yeah, just make contingency plans. This is what it is. You need to see how you're going to approach that. So yeah. Fear 10 cents said, I have 450k XFA. Any tips on if it's better to copy or trade individually, risk management, stuff like that? My response here is going to be dependent on the amount of competence and years trading experience that you have. If you're somebody who's been able to take payouts at least once per month, very consistently for the last 3 months, copy trade to your heart's content because you've proven competence. If you've gotten one payout or no payouts, and now you're sitting on 450k XFAs, I would say do not copy trade them. Focus on one of them, or maybe do different strategies. Maybe use one for the London session, another one for the New York session, and if you trade different products, maybe use one for equities, and then use the other one for like commodities or metals or energies markets, or try different things. Scalp in one, swing in another, or maybe do different risk rewards. So same setups, but in one of them you aim for 2R, in another one you aim for 1R, and the third one you aim for 3R. Maybe copy trade a couple of them. But if you've never taken a payout, if you've taken a payout like forever ago, I would just focus on one. I don't know why you went for 4 in the first place, because you need to prove competence first, then scale, not the other way around. But if you're very experienced and if you're, taking payouts, pretty frequently, which would be at least once a month for the last 3 months, then, you know, do whatever you like, mate, you know. Ken says, if I can ask one more question, not acronyms. I appreciate that, thank you. Figure at the left is the measurement tool, but the top, I cannot find it. Is that the date range? Well, which one do you mean? Figure at the left. This one is price range, yeah. Are you talking about the volume profile? So let me know. If we're talking volume profile, this is fixed volume profile. It's not a measurement tool, it's a profile tool. So you would go to indicators and then go fixed range, but it's not going to do anything until you drag it, because you need to give it a time. So for example, if I want to drag it from the start of Tokyo all the way to the start of London, then you get the Tokyo profile. So you need, click it, and then you pick a time, end, start and end. And then it's going to give you the profile. Is that what you mean? Price range, the top of that, I have a dot. Oh, this one. I don't know. It's just, yeah, I've never changed that. So I don't know. I really don't know. I thought that's how all of them look. There are a couple of them though, so hold on, maybe, yeah, so there's a date range. I'm covering it up, so let me just block myself. So there's a date range and there's a price range. So I'm using the price range. What happens if I use date range? Same thing, but going horizontal. And yeah, so when I grab this, I've changed nothing apart from the color, and I just do this and it, yeah, gives me a line. So I don't know, I don't remember changing anything. It's a bit weird. Yeah, but for me it was just a default. I just changed it to yellow. So I don't know what the default was. Maybe the default was, I don't know, the color of the chart or something. But yeah, I never changed that. So maybe if you go back to defaults, maybe it's going to show again. Gold. Yeah. Gold, please. Gold is a snooze fest, man. Like, you know how silver is not being the most lively right now, but at least it's sort of, you know, nicely going higher. So let's have a look at gold. Let's make this into 2. Yeah, unfortunately we're not tagging anything. We are not tagging any of my levels. So we have to be patient. We have to wait. So, when we look at silver versus gold, let's get rid of some of these to make the charts bigger. Which one looks prettier to you on the 30-minute? This one has a definite upside skew, right? What is this? A barcode. I don't know. To me, gold just doesn't look right today. Maybe it may look, and we even had the London fix for gold 10 minutes ago. So London fix comes at 10:30 a.m. And then again at 3 p.m. But silver is midday. only once a day, whereas gold has 2 fixing prices in a day. So we've just had that. So you would expect a sharp reversal from there, which we may get. But structurally, the Asia range is rather pitiful. And the trend is non-existent, right? Just flat. So I'm not particularly interested in gold. I can give you some levels. So we've had the put support at 42.30 from the 0DTs. We have some levels lower down, around 4,200, and to the upside, 4,300, like the extreme upside, all the way. Yeah, and this call wall has not changed. Call wall has stayed there for weeks now, also implying that maybe there's not that much interest. But yeah, I would wait for COMEX for gold, because this is just like, it's not doing anything. So it's like, what? We can't trade when it's so flat. And to be honest, even silver, yeah, it's been going up, but it's gotten stuck in a range now, which is very normal for this time of day. So we need to wait at least for the London fix. You know, maybe some LME trading from the base metals might push a little bit over into the precious metals. So that could be, you know, midday should be the time of day when everything starts livening up. But for me, gold is almost exclusively a COMEX product. I like to trade copper for the LME because that's a base metal. And, you know, if we had zinc and tin, I would probably trade that too. But we only have copper here. So, yeah, not really seeing much on gold. Let's have a look at higher time frames. But again, it's been like, yeah, 4-hour chart, super messy. Daily, very range bound. Like, what is this? It hasn't moved. Like, it stayed in this one range for days, for absolute days. Like, it's literally just so range bound. Is this a distribution? Before we kind of turn back. And this was a reaction. So let me just clean this up a bit. And then we can discuss a bit better. Just going to leave Asia high and low there. But from a bird's eye view on the daily chart, where are the supplies and demands? This is a supply. Are we there yet? Not quite. So it missed it by a little bit. We did have a wick a few days ago. We had a wick above the previous inside high, and then a reversal that went nowhere. This could be a reaccumulation before we go towards this 43.05 area, which is where the supply lies. Do we have anything in the options chain at 43.05? Not a large open interest there. And again, we got close to 4,300 and then sold off. But right now, just looking at this, it's pretty high up. So I don't really like it from the point of swings. I would need a pretty deep pullback here to reach maybe that 4,200 level, which is where the ADR low is located. So maybe 4,200 would be an area to look for more longs. But right now, daily chart, middle of the middle. This is what I mean about zooming out, right? Immediately, it's going to stop you from overtrading. Because you're like, oh, 5-minute chart. What? Oh, we're at the bottom of the range. Oh my God, I have to get in. Like, hold a bunch of FOMO, right? Why? Because you're seeing this localized low as a triple bottom, woo, you know? And yet, you go daily chart and you go, ew. Ick factor, right? Ew. Like, what's that trade location? So it's like, what would be a better choice? Well, we either get up here or we get down here. Or within a day's range. I'm not talking, oh yeah, wait for 2 weeks, then you're going to get it. No, this is within the day's range. That's the beauty of quantitative extremes. How much do we expect this to go? And then even a 30-minute time frame can provide you with additional references. So in this case, Asia low, Asia high. Where are we? Well, you know, on a 5-minute chart, you're seeing localized busts through the inside lows. But then here you see a bigger area, and you also see the previous Friday's low. So both of those become game. If I then see where my quantitative extreme is, well, it's 4,200, which means that's the daily bottom. So out of these, this area here would be just about okay. Just about okay. So game for longs intraday, totally. But not for some like massive swing up towards the 4,300. For that, I think we do need a deeper pullback. So an exhaustion of the day's range at 4,200 would be a very, very good area, if not ideal area, to look for longs. Now, they will smash through it. This is gold we're talking about. It's kind of like NQ at this point. It will slide through the levels before reclaiming them. So don't expect exactness. It's not going to be like, oh yeah, to the point. You go to the point and then start trading with size, and you realize that to the point and to the tick just doesn't work because of slippage. But 4,200 would be a decent statistical area to become a buyer and to stop looking for shorts, right? Now shorts, Asia high, definitely one choice. All the way up close to 4,300, where we do have the call wall, definitely area for shorts, right? So all of this from the previous high all the way above 4,300. So that's how I create my plans, right? It's like, well, we could have a short at Asia high, but, you know, if that one doesn't quite work out and we get a breakout, you might use Asia high then, or VWAP, bounce, Globex VWAP, to run a directional move. So that would be a case of either or. But if you start flipping and flopping, and then you go, we broke out of the Asia high, but we didn't have anything much happening, well, I'm going to short it. Don't do that, right? So stay on one of your time frames should be at the very least 15 minutes, but I prefer 30 minutes and 4 hours. Do I look at all of them? I do. But where do I execute from? I look at signals from a TPO profile, which is a 30-minute time frame. But I will zoom in on a 2-minute, 5-minute and tape and bookmap to get a better entry, or to, you know, get a little bit less drawdown upon the entry, even though I almost never expect my trade to go immediately into profit. I am not interested if it's going to draw down or not. The only thing that I'm interested in is my stop loss at the right place, away from danger points like round numbers, and is the trade ultimately successful or not? And did I follow all the conditions? Were they conditions? Like, for example, you see here, stop run must be above Asia high, volume spike must be between 1.7 to 3 times. If over 3 times, continuations high odds. Did we have Asia high? If I'm away from Asia high, there's no trade. Did the spike happen? No spike, no trade. Was there return into range? That's another one that's not in there, but it is in my algos. No return into range, or big buying wick that's more than a third of the whole length of the candle. That's an invalidation. If I don't have those, I'm not going to trade. So I talk a lot. But, you know, you don't make money clicking buttons. You make money waiting for your setups and being super hard-headed about that. Whenever I move away from my condition-based logic, I immediately start sucking. Like, it's just not good. Clicking buttons for the sake of clicking buttons is not a binary decision process. So we need to be as robotic as possible, but it's not quite that simple because we're not robots. So obviously something like flowcharts, like if I was going to put this in a flowchart, how much time we've got? We've got 10 minutes. So let's see if I can maybe illustrate that. So let's take this one because it's got very nice... thing here. So if I were to create a flowchart of what should happen, based on this, Bon, I don't need you to narrate things. Right, so flowchart. Let's take this. So what do we need? So we need London range over 0.75 bucks. Okay, that's step one. If you don't have that, no setup. Like right away, invalidation. London range less than 75, no setup. Walk away, go play video games, go hang with your kids, go do anything else apart from trade. Then we're going to do the next one. If we pass the tests, so if we do get this, so London range over 75 bucks, awesome. The next one, Asia low, stop run and reverse, liquidity sweep. I like to call it stop run and reverse, or stop and run. Do we have that? So stop run, reverse back into range with quite some power, and a follow through, right? If there's no follow through, you then have to stop managing the position. But no stop run and reverse, no trade. Now for the long side, I don't have this condition. Why? Because we have a strong uptrend, so I don't need it. So any volume spike that's there and a reversal is game. And then after that, I can do 50% if it's shorts of the London range, of this range, or 100% if it's a long, because we're with the trend, right? So that will be the final one. Once you're already in a trade, this is a long, so target, but let's say we keep it, reasonable, 50% of London range. Time also must take out the low after NY cut. So after 3 p.m. it can't happen before on silver because we have option expiries on correlated forex products, and then we also have the gold London fix for the second time that happens at 3 p.m. So all of that brings some additional risk into consideration. But this is how you create your systematic rules. So what needs to happen? This is the first condition. Without it, go and take a hike. Second one, you need to have a level, Asia low. What needs to happen at the level? Stop, run, and reverse. Where's your target? It's not like I think it's going to go this way. No. How far did it go in the past? This is where Edgefold can help you, right? What is the normal, movement for this time of day from this reference point? I don't know whether they go that deep, but that's something that I do with my stats. You can use ChatGPT as well if you got CSV files, which is again where MetaTrader is quite good, because you can go into AMP backend, drag out the ticks, download them in a CSV file, and then feed it. I've got Cursor AI because I obviously do a whole bunch of other stuff, and again, not super cheap, but I think you can get it as like an individual. You don't have to have a team or a business, and then you can actually put that CSV tick data and tell it what to analyze. So this is where AI is useful. If you want to write actual algorithms, you need to be careful what they're doing, but this is the first step to systematic trading. So when people ask me, Dee, why aren't you trading? Because there's nothing to trade. Like, for me, I'm not chasing. I'm not going to be the Muppet who oh yeah, let's try a long. Why? Well, just because. Well, actually, let's try a short, even though we're nowhere near the Asia high. See the difference? But this is step one. This is how I learned to keep my FOMO in check, by creating a flow diagram and just going, no, if this is not there, no, you're not doing anything, D. Go and sit in your hands. Hands on your butt, as Hogue used to say. And then when you have the first condition, there's the other level. Okay, it's great. So here's your low. What do we have? Then you watch. Then you kind of put your, zoom in goggles and you look at what Bookmap is doing. You look whether there's any absorption at that level. You look at what the follow through is. Look at FVGs. Whatever you're looking for. That second part is the time to start looking for your actual entry. And then the final part, how is the price behaving? What is the statistical target? Let's not overshoot. Is it statistically viable? For me, it has to be over 1.3R. If it's not 1.3R, I don't want it. But just by nature of needing this in order for this to happen, I always have at least 2 to 3 R multiples available. And to me, this has been a game changer. But I'm a nerd. I like flow diagrams. These are very simple flow diagrams. You don't need to be a technical person. You put three rectangles with some arrows on there and have them in front of you. And then when the time comes, you look at them, print them out. Old school, right? Put them on an actual piece of paper. Stick it up on the wall. And then go, right, let me see if I have these conditions. And then as you start to trade through that kind of a view, stress goes away. You know exactly what you're looking for. If it doesn't happen, it's just another probability thing that didn't quite play out that day. But you also know the probabilities. Like, for example, I know that on a day where the London range is over $75, or 0.75, I know that when Asia low is tagged, I know that it can run for 100%, never mind 50, of the entirety of the London range. How often does that happen? It actually happens about 72% of the time, if we're looking for the last 2 to 3 years sample size. So on the days when that doesn't happen, or there's no follow-through, or, maybe it just goes into a downtrend, that's the other 27%. Like, I don't freak out. I just know, okay, low probability setup. Cool. Didn't work. Next. I don't go, no. Don't need to chase. I need to get my money back. So, systematic, this is what it's all about. So try it and let me know how it goes, because I think it's going to be a very interesting exercise for everybody to do. How much dissipation of FOMO will you get through just creating a simple binary decision flow diagram? Fear 10 cents says, I have one strategy that gives me 1 trade per day. I have backtested on 1 pair. Give me good results. Should I be looking to improve that strategy? No, just trade 1 trade a day. Yeah. Ken says, devil's advocate question. What if you only had project X to trade? Pick a new asset and guide us through the setup. Well, I mean, here it is, right? Asia high, Asia low. Those I just use my eyes for. I don't need anything else. And then fixed volume profile and ATR. Those are all on here already. So let me, again, block myself out. So if I make this bigger, I use my indicators because they automate the process. Is it impossible to do it without them? Absolutely not. I mean, So how would I project ADR high and ADR low? By going to the daily chart and looking what the ATR is telling me. So what sort of ATR do we have? And yeah, I would probably have to use an Excel spreadsheet again, which I wouldn't be very happy about. But right now, silver, how many points? About $2.02. So let's say just over $2 of ATR over the last 9 days. We can increase this to, because I have it faster, so I can increase that to 14 just to make it a bit more true to what I do on the daily chart. So let's have a look. Yeah, so about $2, right? So you can expect a $2 move up and down. And then I would do what I used to do in the case of ATR. So I would see where it was at my midnight, so where it opened at my midnight, and then I would project up and down with the new highs and lows. It's a very good question, by the way, very interesting, because it brings me back, takes me back in time when I didn't have all the fancy tools. So where are we? Let's say midnight. There we go. So that's midnight. And then I would put a vertical line. This is old school D, the way I used to do things. So I know that we had the open there, And I know we have $2 up and down. So now we go to the price range. Where's the low? I project 200 or $2 from there all the way. Now this changes as the date changes, but this is your starting point, right? So you go, that would be roughly there. So 60, 80. And then also doing that to the downside. Just roughly starting point, right? This is your starting point. There we go. Now, as Asia starts moving up and down, these will move, right? So they're not going to stay where they are. But you have the $2 projection up and down. So what you do, if it makes a lower low, then this comes down with each new low. So you roughly get to this point. And I have more sophisticated tracking where it's weighted average and a whole bunch of other things. So it's more accurate. But this would be, for example, right now, we've come down to ballpark $2, which is falling around 59.82. But with the weighted average, that puts it at the moment just over 60. And that's the more accurate measure. But manually, this will still be good enough, right? That's what I used to do. And then as the day used to start making a new higher high, you would move this one back up with the higher high to account for the thing. So anytime the price exhausts one side of that first, that's your exhaustion of the range, D style, okay? And that becomes game for shorts. But in my indicator, I have some weighted averages that take in quite a few things. So that would be my manual way of doing things. And volume profile, very self-explanatory. You just get the fixed range volume, plop it on the time frame that you want, from the active exchange up to the end of it. For me, it's the electronic trading, so I take the entirety of COMEX and up to 9 p.m. my time. And then you have the value area, so there it is. And that's it. You have everything you need here. Everything else that you add, the fancy tools, like the options levels and all of that, that is an additional view of gamma exposure which can help you. But for me, this would be all that I need. Very possible, right? Project X only. We did not touch anything outside of Project X. And yet you get very similar levels. So, very interesting question. Thank you for that. That was fun. All right, guys. That's it for today. And High Volume says, how did you do for month of November? I don't have stats because I showed my stats from the combines I was working on. I don't have stats on the live because we don't have a calendar on live because it's a different server. And that one's been closed now. And the XFA I just started. So 3 days is nothing. So I don't think that 3 days of trading means anything. Once I have a little bit more, once we're like 2 weeks down the line, I will run through the stats with you and we can see what is happening, which I've done before as well. In the meantime, let's see what the Monday brings. And yeah, very quiet on the metals front. I think energies are moving more today, so maybe that's something to look at slightly later. Equities are quiet. So yeah, I think I'm going to wait for COMEX to kick in and then we can see if we have a setup today or not. And I don't trade every day either. Sometimes there's no setups that I want to get involved, so I will stay out. Until then, I will see you tomorrow. So yeah, let's see what they want to do. In the meantime, that's all I have for you. I'm Marcus Stalker D. This was the Eurotrade on TopstepTV. Take care.